Hello, ETF fans. Mike here with today's video insight. Today, I want to dive in and do an update on new ETF launches year to date. Today is Tuesday, or yeah, today's Wednesday, August 14th. I'm losing track of time. And so what I want to do is I want to use our Navigator tool. So what you're going to want to do is you want to navigate down to the Navigator tool. No pun intended there. And what we can do with the Navigator tool is we can set a bunch of filters to allow us to zero in on launches over a specific time frame. So specifically, I want to look at launches year to date. So right now, what we're looking at is all ETFs grouped by asset class, composite, and category. We can see $9.2 trillion broken out across all of our different asset classes. Of course, if we expand that, we can get into the composites and then ultimately the categories. But we want to do this exact same look. However, I want to isolate the database to just ETFs that were launched this year. So to do that, you go to the right-hand side of your tables and you click on the filters button. Underneath key stats, there's an inception date. Under inception date, we want to do greater than. We're going to put the end of last year, so 12/31/2023. And once I hit apply, it's going to update the database to be just ETFs that have launched this year. So the first thing we'll note here is obviously that right now I'm broken down looking at just asset class. Undoubtedly, probably the biggest story of the year is the cryptocurrency market, right? So out of $85 billion across all of the new ETF launches, right? 300 plus new ETF launches year to date, 61 billion of that is in cryptocurrency. If we break down the cryptocurrency market, we're going to see that 54 billion of that has come into crypto Bitcoin ETFs. So, and note these are the long only Bitcoin ETFs, whereas 7.4 billion has come into the Ethereum, right? So a large part of that, both of those AUMs, if we go here and look at year-to-date flow, we can see the year-to-date flow is much smaller than the AUM, despite all of these ETFs just being new to year-to-date. And that's because the two grayscale products that used to be closed-end funds that converted to ETFs, GBTC and ETHE. But obviously, much to my chagrin, crypto is dominating the story from an AUM perspective on a year-to-date basis. Next, we can see that we've got equity strategies at 10,245 million year-to-date in AUM. Again, you'll also notice here, 5.252 billion in year-to-date flows, much smaller than the overall amount. That's because a lot of these new equity products have been conversions from traditional mutual funds into ETFs or from an SMA into an ETF. So they convert with a significant amount of assets versus that all being organic, new, natural flows into the space. Non-traditional, big story. I'm going to get into that a little bit more detail here in a second, but a ton of products being launched in the non-traditional space, primarily in synthetic income and buffer ETFs with $8.1 billion just in those new products that have launched year to date. Fixed income has seen $5 billion in new flows. Again, similar story. You had some fixed income conversions, not as much as equity, but note that the year-to-date flow number is smaller than your key stats, which, your AUM is going to adjust based on market fluctuations, where flow is going to be purely flow based on the day that money came into the ETF. So there can be some variances there just based on market movement, but not that much. Part of that is that conversion story, mutual fund to ETF, SMA to ETF. Multi-asset strategies, 11 strategies in that area, with just under $1 billion. Alternative strategies, 37 million, not much to talk about, and one commodity ETF at 13 million. So first and foremost, we already talked about the crypto story. That's a huge deal. But what I want to do now is kind of dive into that non-traditional space. What's going on with that non-traditional? I guess before I do that, though, just to give you kind of a visual of that, anytime in the Navigator that you create new filters, if you hit this apply button, it'll apply that to update our charts. So what we can see, this is just a visual of that AUM breakdown of new launches year to date. 71% cryptocurrency, 12% equity, 10% non-trad, 6% fixed income, so on and so forth. And you can see the flows, across the time frames. It will just be year to date because all these are new launches. So we can get that sense, as you'd expect, mostly positive flows into new products, though we can see cryptocurrency this month, primarily driven by flows out of the Grayscale Ethereum ETF, have seen negative flows. But just a visual of that marketplace. Next thing I want to do, I want to zero in on non-traditional. It's another big theme carryover from the last couple of years that we're seeing in the marketplace. But to do that, I want to zero in specifically on that area. So I'm going to set a couple additional filters. What I'm going to do is I'm going to go into my filter section, classification, asset class, and I'm just going to go isolate this to non-traditional only. So now I see that non-traditional only. What I'm going to do next is I'm going to remove that composite, and I just want to see this broken down by category. And if we open this up by category, we can see, synthetic income has had 43 launches, right? These are covered calls, put right strategies, using derivatives to generate income on a traditional asset class like US equities, developed market equities, things of that nature. Non-traditional buffer ETFs, investors have clearly, and especially on the advisor markets, are looking to put their clients into something that can get upside return, but protect that downside in volatile markets, the capping that gain loss of a traditional asset class in the buffer ETFs. So 88 of those strategies. Note that with those strategies, oftentimes when an issuer launches one, they're going to launch 12 exactly like it because they have different reset months for that buffer time period, that capped gain loss time period. So there's a lot of launches in this space, even though it may just be one series of strategies with 12 monthly resets, so 12 individual ETFs. Leveraged inverse, 770 million, 29 strategies. That's an interesting story there. And to illustrate that story a little bit more, I'm going to add another grouping. I'm going to pull down our composite grouping underneath category. So now when I come into the leveraged inverse, I'll be able to see it broken down. And Bitcoin is, not surprisingly, another story there. Folks don't just want the volatility of the Bitcoin, they really want to drive up the volatility of Bitcoin. So they've added some leverage and inverse strategies on top of it. But this is an interesting one. The single stock marketplace continues to grow. We're seeing more and more launches every month with respect to stocks that are tracking single stock strategies that are tracking a single stock, whether it be levered, or inverse strategy on a single stock, or some sort of synthetic income on a single stock. If we come up here to synthetic income, you'll see that single stock also has had a bunch, 842 million, 9 launches of covered calls or some sort of option overlay strategy to generate income on a single stock. So another interesting trend there within the non-traditional category. But that breaks down that non-traditional space. A lot going on there. Clearly, the ETF wrapper is, growing in terms of being the product of choice, not just within your traditional equity and fixed income markets. It's expanding out to really be the wrapper of choice for almost all asset classes, as whether they're traditional or a little bit more esoteric, a little bit more niche in nature. So non-traditional, big story on that area. Next thing I want to do, and kind of the final area I want to talk about, is active passive. So to do that first, I'm going to go in back into my filters. I'm going to reset my filter on asset class to bring back in all asset classes. However, note that with non-traditional strategies, even though they're generally tracking a very defined rule set, they're technically active strategies. So that seeing a bunch of active ETFs in non-traditional is a little misleading. So what I want to do is I just want to see active passive broken out in your 2 major categories, equity and fixed income. So to do that, first thing I'm going to do is I'm going to go in here and I'm going to set a filter to just be on equity and just be on fixed income. I hit apply. Okay, we can see 102 equity ETF launches year to date and 68 fixed income ETF launches year to date, 10 billion, 5 billion. What I want to do now, though, is I want to redo my groupings to look at it broken out by active versus passive. So if I get rid of category and get rid of composite, I'm going to go over to my column setting and I'm going to pull down discipline, which is simply active or passive. And if I pull that down under asset class, now what we're going to be able to see is a breakdown. So year to date, there has been 64 active ETF launches and or conversions. Note, conversions from mutual fund ETF wrapper, but a launch nonetheless, a new launch in the ETF space. And if I look at that from an asset perspective, about 60%, a little under 60% of AUM has gone to active. 4.4 billion or 45% has gone to passive ETFs. So while passive still dominates in terms of total AUM for the whole ETF space in equity, active is clearly the new choice for new launches in the marketplace. Makes sense because some of the other areas are more saturated. There's clearly an investor willingness to use the ETF wrapper to get active management. And there's clearly, I think, a bigger part of that story is a willingness by the portfolio managers of these active strategies to disclose their holdings on a daily basis, right? And that's a big trend we're seeing there. All right, so now let's take a look at fixed income, active, passive. This is a whole different story. Investors, not surprisingly, fixed income is, if you look at the mutual fund space, far more than equity has always been dominated by active for a number of different reasons, but we're seeing, almost, over 80% of the new flows into fixed income, new launched fixed income products have been into active ETFs, and the overwhelming majority of the funds launched have been actively managed. So big story there, I think, is that while in terms of overall assets under management, active passive is still a pretty, it's dominated by passive in the ETF space. The trend is going towards active, both for new launches as well as flows into new launches. Now, flows overall, if I were to take out that setting so if I come over to my filters and take out that setting on an inception date, so I come in here and just reset that inception date, now we're going to get a picture of everything across the board, right? Now that's going to bring back in that passive story. $7 trillion in equity ETFs, 6.7 passive, 317 billion in active. Fixed income 1.7 trillion, 1.46 trillion in passive, 232 billion in active. Now, if we look at flows, clearly the flows are suggesting that that dominance is going to start shrinking, but passive is still leading on flows, just not by the same percentage amount that they lead on AUM. So a lot of trends to look at across the new marketplace. Our Navigator tool is the absolute best way to look at and navigate those different trends that are going on in the space. If you have any questions on how to use the tool, this is a free tool if you create an account at ETF Action, so anybody can use it. However, if you want to download the data or download the charts, you do need to be a premium subscriber. But to use the tool, to have fun and explore, all you got to do is create an account. And as always, if you have questions, reach out to team at ETF Action, and we will be happy to set up a one-on-one demo or answer any questions you have. I hope you enjoyed today's video. A lot going on in the ETF world, and hopefully I provided a little transparency into those trends for launches in the ETF space. I hope you all have a great day, and thanks for watching today's video insight. Thanks.